Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we're starting with Asian stocks. They declined on the final trading day of this week as investors awaited the U.S. non-farm payrolls report for the month of August. That, of course, may play a crucial role in the Federal Reserve's decision about when to lift interest rates. The Tokyo bourses kicked off the day on a positive note, but they were subdued to wild swings, which brought the Nikkei 225 index down to a 7-month low of 17.608. On the back, of course, of a stronger yen. The Japanese currency strengthened 0.5% against the US dollar in Asian trade, denting risk appetite for most countries. Now, data released by the Japan Exchange Group on Thursday showed net selling of Japanese cash and futures stocks by foreign investors last week hit a record high, as of course worries over China led slowdown to intensify. The yen, of course, as we mentioned, nudged slightly higher versus the dollar at 119.51. Australia's S&P 200 index finished modestly higher with 0.3% after, of course, swinging between gains and losses all day long. In the currency space, however, persistent worries about the health of China's economy pushed the Australian dollar below 70 US cents, hitting a 6.5-year low. The euro in the old continent nursed losses on Friday, having come under broad pressure after the European Central Bank gave a sobering assessment of the Eurozone economy and, of course, suggested it may have to beef up its already massive stimulus program. The common currency slid as far as 1.1087 from levels above 1.12. It last stood at 1.1127. For the first time, ECB President Mario Draghi said explicitly the bank's bond buying program may run beyond September 2016, and of course that its size and composition may be adjusted. Bottom line is that the risk the ECB's current asset purchase program is extended beyond 2016 is rising, which should continue to weigh on the euro and, of course, Eurozone short-term swap rates. Gold in the commodity sector held declines from a two-day losing streak on Friday ahead of crucial U.S. job report as traders waited for clues about the timing of Federal Reserve rate hike. Gold was little changed at 1124.20 an ounce in late Asian trade after losing about 1% in the last two sessions. The metal, which fell to a one-week low of 1121.35 on Thursday, was on track for a second straight weekly decline. Expectations, of course, are the U.S. economy to have produced 220,000 new non-farm jobs last month. Oil prices in the energy sector eased in Asian trade on Friday as investors turned cautious ahead of the U.S. job data later in the day, which, as we mentioned, is expected to play into the Federal Reserve's decision on the timing of any U.S. rate hike. Oil stuck to a narrow range in a thin trading with Chinese markets closed as second day for a holiday to commemorate an end of World War II. U.S. crude for October delivery was down 20 cents at $46.55 a barrel after settling 50 cents higher in the previous session. Investors are also keeping an eye on U.S. oil rig data due later on Friday, and any drop in rig numbers could bolster oil prices outlook. In the calendar today, the most important NFP data at 12:30, along with unemployment rate, and of course, average hourly earnings data, all of that with high volatility expectations. Keep an eye on the calendar for all traders and investors. Important trading day today. Thanks a lot for watching. See you next time. Bye-bye.